Hey, soldiers, an era of economic totalitarianism is taking shape globally and here in the US. Now, we're going to show you how right here, right now, electronic payments are being used to violate the rights of Americans. We're not talking about the Canadians. They did have that happen when Justin Trudeau decided to shut down bank accounts because people expressed the wrong view. But this CBDC concept, the central bank digital currency, is going to take that type of government control to a whole new level. And we're already seeing the seeds of it sown right here in what is supposed to be the model democracy, the United States of America, right? Well, when I tell you how rights are currently being violated via payment systems, you're not going to be able to believe it. We're also going to go over how one country in particular, the citizens of that particular country, are fighting back. They are saying, enough is enough. But at the same time, that country's government is putting up a hellified resistance. And you won't believe what they're doing. Stick with me. We're going to go through the whole 9 yards. Okay, to start off, digital currency, the Fed moves toward monetary totalitarianism from zero hedge. The Federal Reserve is sowing the seeds for its digital currency, also known as the CBDC or central bank digital currency. It may seem that the purpose of a CBDC is to facilitate transactions and enhance economic activity. Sure, that's what they're going to bill it as. That's what they're going to tell you that it's for. But in reality, the main idea behind this is to exercise and implement a greater degree of control over sovereign citizens of the various countries out there. So you're not going to have a Stalin come in and just, be the personality behind some sort of traditional dictatorship. No, they're going to control the citizen based on or via their economic transactions, their employment. We've already seen it, right? Okay, so you don't do a certain thing that the government wants you to do, and you lose your job. Now, that's being fought in the courts right now. We'll see how it pans out. But the trend is clear. The intent is clear. We've seen over the past 3 years what's going on. Imagine if they had a way to just outright control your money inside, quote unquote, your account. All right, so the article goes on to say, if a CBDC were implemented, the central bank would have access to all transactions in addition to being capable of freezing accounts. Now, why would they freeze accounts? Well, one reason is to control inflation. If the government, central bank more appropriately, decided, you know what, we need to slow down economic activity, and we have the capability to throttle. Okay, that term is used in the telecom industry when they want to slow traffic to certain broadband customers. It's called throttling. So the Fed will say we have the capability to throttle or to altogether halt an account. And believe you me, that is one way that they're already entertaining controlling inflation. So Rova, the former comptroller of the currency nominee under President Biden, has as much said so on multiple occasions.
So that's that's where my paper is kind of taking off and kind of trying to run with that ball and see how we can push the idea of creating Fed accounts, digital dollar deposit accounts that would be universally available to everybody at the Fed, to kind of push it a little bit to the limit and to imagine what would it be like if instead of being just a public option for deposit banking, this would be actually the full transition. In other words, there will be no more private bank deposit accounts, and all of the deposit accounts will be held directly at the Fed. And there are very interesting implications from that thought experiment, for example, with the much more direct and proactive tools of monetary policy, like helicopter money, which is, considered radical primarily because economists really do not know how to manage the issue of what will happen in the inflationary environment when the central bank needs to contract the supply of money. How is it politically feasible for the central bank to effectively take money away from people's accounts. And so in this paper, I try to figure out a mechanism that would actually achieve that goal functionally without draining the money permanently from people's accounts. And we'll see if it works, if it doesn't.
Now, it may seem dystopian. It may seem dystopian. It is dystopian, something that only totalitarian governments would do. But there have been recent cases of asset freezing, of course, in Canada and Brazil. Moreover, a CBDC would give the government the power to determine how much a person can spend, establish expiration dates for deposits. So that one right there would play well into this whole, we've asked the question on this channel before. Why is it that the government does not do more to teach people how to be economically independent, how to build generational wealth? Well, the answer is easy, because that is not what the government wants. If they had a system or a population that, were of savers instead of just profligate spenders and consumers, then the way this country works would be much, much different. But right now, what the United States wants is, in the Western world, in general, what they want is people who are in debt, who are spending. Now, life in general is expensive. You got to heat your home or cool your home. You got to illuminate your home. You got to buy food. All of that is, more expensive today because of inflation. But what if they could say, use it or lose it on your money, to keep money out there working for the system as opposed to growing for you? Okay. So what they're going to do, if they get their way and take it to the furthest extent, is they're going to pretty much quash the traditional savings account where you just held money in perpetuity. Now, that's not necessarily a bad thing, because savings account as currently constituted don't really work for you. And the banks really aren't interested in savings account in an environment where, the interest rate is, extremely low anyway. So we've got those factors going on, but they will be able to put expiration dates on your money. I had a guy tell me that I was engaging in clickbait when I brought up the fact that the British said that the 20 and 50 pound notes, this was a comment that I made on Facebook, the 20 and 50 pound notes would expire, and they would be able to be traded in for new polymer 20 and $50 pound notes. But if you held on to the old ones, they would no longer be useful. Now, I had somebody tell me that I was engaging in clickbait because I said those notes would expire. I shared with him the Bank of England's website that said the notes will expire. Okay, so there's a lot of resistance in terms of understanding what's going on and accepting it. But when you have these central banks controlling the money, they can right now they have a wide latitude, but you let them get their hands on a CBDC and it's going to go even further than that. And that's why you're not going to be able to believe the types of purchases in America that are already being interfered with and interdicted. We'll get to that in just a moment. All right. Another thing they'll be able to do is basically penalize people who have saved money. And one of the ways, of course, they'll do that is through the expiration dates. The war on cash is also a reason why governments want to implement CBDCs. The end of cash would mean less privacy for individuals like you and me, and would allow central banks to maintain a monetary policy of negative interest rates with greater ease, since individuals would be unable to withdraw money from commercial banks to avoid losses. Once the CBDC arrives, instead of a deposit being a commercial bank's liability, it would be the liability of the central bank. And, when the government not only controls your money, but controls the way you spend and save it, then they've got an outsized, to me, that's serfdom. Okay, guys, that's out and out serfdom. And that's why I'm happy to see the citizens of at least one country understand what's going on, and they're trying to resist this. In 2020, China, and we'll get to that country in a minute, China launched the digital yuan program. As mentioned, China wants to implement a CBDC because, quote, this would give the government a remarkable amount of information about what consumers are spending their money on, okay, unquote. In 2020, the government could easily track digital payments with a CBDC. So you might think right now, what's wrong with that? Like, for example, I went to the supermarket today. I bought some food. What's wrong with someone knowing what I purchased? For God's sakes, the supermarket, they know, right? So what is wrong with that? Well, when it starts to interfere with your rights, then it gets into some dangerous territory. The People's Bank of China has also indicated that it could put limits on the size of some transactions or even require an appointment to make large transactions. Some observers wonder whether payments could be linked to the emerging social credit system. You better believe that will happen, all right? Right now, the Chinese social credit system really gets into your economic life by preventing you from eating at certain places, living in certain places, freely moving about the country at will. So you can best believe that once they establish the digital yuan, they're going to certainly kick that up a couple of notches. Wherein citizens with exemplary behavior under this social credit system are whitelisted for privileges, while those with criminal and other infractions find themselves left out. And don't be tempted to say, oh, well, you shouldn't be out there committing crimes. This is 2022. Hard time on planet Earth. And you have seen that if you're, whether you agree or not, it's not about whether you agree with the statements of someone like a Kanye West or any of these other, for Donald Trump. It's not about whether you agree. Just keep in mind, if they can do it to the powerful, what can they do to you? So when people applaud the fact that the IRS has divulged information about certain political figures that they don't tend to like, if they can do it to them, what do you think they're in there capable of doing to you if you step the wrong way? Or if somebody just says, hey, let's mess around with this guy today. let's see how he fares without the billions of dollars to put toward a legal defense. All right, the Chinese government is waging the war on cash, and they are not alone. In 2017, the International Monetary Fund published a document offering suggestions to governments, even in the face of strong public opposition, on how to move forward to a cashless society. Governments and central banks claim that the shift to a cashless society will help prevent crime. See, this is the type of language where they get you, okay? It's going to help prevent crime. No, it isn't. There have been criminals throughout every iteration of human society. Long before fiat currency came into play, there were criminals, okay? Criminals have existed in the Song Dynasty in China when we had the first paper currency issued. They were running around during the Byzantine Empire. Long before the concept of a central bank. Criminals are going to figure it out, okay? So this is not going to prevent crime. What it's going to do is it's just going to force criminals to adapt, as they always have done. So that's quite the red herring. They're also saying that central bank digital currencies are going to increase convenience for ordinary people. Increase convenience? Like I said, earlier today I went to the grocery store. It was pretty damn convenient, okay? I just gave them the money. They let me walk out with the merchandise. Convenient. How much more convenient can it be? So not even their explanations are really rock solid. It's kind of nebulous, to say the least, because the real motivation behind a war on cash is more government control over the individual, naturally. And the U.S. is getting ready to establish its own CBDC. The first step was taken in August when the Fed announced FedNow. I've got some information about that up on my screen behind me. But all you need to do is just go to fednow.gov, and it'll display, and you can learn all about it. FedNow will be an instant payment system and is scheduled to be launched between May and July of 2023. So this is happening, folks, okay? All those people say, well, it ain't going to be 2040, but no, it's happening. It's happening now. Now, in order to kind of drive that point home, you got to look at another aspect of the current payment system structure that we have. Gun shops and customers claim credit card firms restrict firearm purchases. Now, here in America, the Second Amendment is an actual right that is codified in the Constitution. It has to do with the God-given right or natural right, or whatever you want to say. I have a natural right to defend myself, my family, and my property. Okay? That is an actual right. You hear people saying, this is going to be an unpopular statement. I heard a guy say today that good health, was a right. No, it isn't. Because a health problem could strike anyone at any time, and it has nothing to do with politics and wealth. Wealthy people die all the time, okay? They get diseases and they pass away. So just from the standpoint of saying that, good health, that's a right. No, it is not. Now, the type of health care that you get, sure, there may be disparities in that depending upon your income level. Absolutely. I'm not disputing that. But if health in general, good health, was a right, then we'd all be immortal because we wouldn't have any health problems. Anyway, the Second Amendment is in the Bill of Rights here in America. And so it's kind of weird when we see credit card companies interfering with those types of transactions. Gun rights advocates warn that a new change to the credit card industry to add a firearm and ammunition specific merchant code for gun stores wasn't about tracking guns necessarily, but could lead to the denial of lawful firearms purchases by law-abiding citizens. In September, Visa, MasterCard, and American Express all said they would adopt the MCC code to categorize sales at gun shops. Months later, several social media posts of alleged gun stores and customers claimed they experienced card issues when attempting to purchase firearms-related equipment such as ammunition. Twitter account Battlecock Tactical tweeted, "Looks like the Doomers accurately called how the new firearms merchant code would go down." Battlecock Tactical's image that you see here shows what appears to be a retail point-of-sale system at an FFL, or Federal Firearms License Dealer, that reads $913.70. That's the amount of the transaction, and declined. The error code on the merchant's computer screen reads, transaction declined, charge declined, restricted card, customer bank does not allow this card to be used at this type of merchant. Brought to you by Fork Bank in Kentucky. Customer went straight to the bank and closed the account. Bravo. So we're seeing this even before the establishment of the actual CBDC. We are seeing that these card companies, these financial institutions, are displaying a predilection for restricting what you're able to buy with your hard-earned money. All right. So if you run into this, I don't give financial advice, but I will give you some advice to keep yourself free and sovereign. If you run into this and you try to go buy a firearm or some ammo and you're a law-abiding citizen and the government, you fill out their form and they say, all right, go for it. And then your card says you can't do it because it's restricted, you need to get rid of that institution ASAP. They don't respect your sovereignty. They don't respect your freedom. And they damn sure don't respect the Bill of Rights. Another picture from the customer's view had the same error message. So this is the other side of the point of sale system, showing the customer what is being displayed for the person trying to ring you up. Someone with the handle Anarchy Coiner also tweeted, I had this happen with my PayPal credit card. I tried to use it to buy ammo at my local FFL and it was denied. Another person said, tried to buy a PSA dagger slide a bit ago and had the same issue ordering from their website with my debit card. Credit card let me order though. And perhaps the gun advocates were right from the get-go. As credit card companies were rolling out the new code in mid-September, National Shooting Sports Foundation lawyer Lawrence Keene explained, it was never about gathering data to aid law enforcement. It is, and always has been, a concerted effort to pressure credit card companies to deny lawful purchases of firearms and put every single gun purchaser on a watch list. All right? And you better believe this type of thing is happening, and it's going to be able to be conducted with many more items than just firearms as we move forward with a central bank digital currency. So what do? Well, you might want to take a page out of the Nigerians book. Nigeria is actually the largest economy in Africa. Nigeria, the government, limits ATM withdrawals to $45 per day to force government-controlled digital payments. A staggering number of Nigerians love Bitcoin, but hate government cryptocurrencies, the Nigerian CBDC. In April, leading cryptocurrency exchange KuCoin noted that 35% of the adult population in Nigeria, roughly 34 million adults aged 18 to 60, own Bitcoin or other cryptocurrencies. But when it comes to the country's CBDC, the Inaria, it was a massive failure. So the Nigerian people are saying, you know what, we get this whole, cryptocurrency thing, but we're rejecting outright the Inaria or the central bank digital currency of Nigeria. According to Bloomberg, only 1 in 200 Nigerians use the Inaria, despite government-implemented discounts and other incentives implemented as desperate measures to increase adoption. You see this happen. We saw it here in the United States when people were reluctant to get an unproven medication. You may remember the one. Krispy Kreme came out and said, hey, you come into our store and you prove to us that you have, taken this gamble, and we'll give you a donut. And I swear to God, I was in a Krispy Kreme getting some donuts. I love Krispy. That's a weakness of mine. But anyway, and a lady came in and she was so excited. And she was so excited that I said, man, why don't you go ahead of me? And she showed off her little verification that she had done what she was told to do. And she said, I'm here for my free donut. And it was like a trophy. They said, hey, ma'am, here it is. What kind do you want? She said the original glaze. She got that original glaze. And she didn't get anything else. And this Krispy Kreme is convenient, but it's like, it's not the place where you come for just one donut. She got her little trophy and she left. Okay? Such is the mind of the modern American, many of them. All right, now, so the Nigerian government is saying, hey, we're doing the same thing. You get these incentives. Here's something. You get incentives to adopt our central bank digital currency that's going to curtail your freedom. Now the government is looking to boost digital payments by limiting, first they offer the carrot, now the stick. Now the government is looking to boost digital payments by limiting ATM withdrawals to just 20,000 Naira, or roughly $45 a day, citing a circular sent to lenders last week. Any amount above this will incur a 5% fee, 5 and 10%. It'll be 5% for the consumer if they go above $45, and it'll be 10% for corporations if they go above their limit of $1,125. So the action is the latest in a string of central bank orders aimed at limiting the use of cash and expanding digital currencies to help improve access to banking. The Nigerians are saying, hey, we're good with this Bitcoin thing, okay? We're good with that. We got access. 35% of them are saying that. But Nigeria is saying, more people need access. Access to banking. This is the ticket, like less crime, which is the other thing they're trying to use to push this. In Nigeria's largely informal economy, cash outside banks represents 85% of currency in circulation, and almost 40 million adults are without a bank account. The central bank last month announced plans to issue redesigned high-value notes from mid-December to mop up excess cash. So kind of like the same thing we saw in the UK, which I mentioned earlier. And it's giving residents until the end of January to turn in their old notes. The bank also plans to mint more of the Inaria digital currency, which was launched last year, but it's faced slow adoption. Now get this, what's more, new rules which will take effect January 9th will ban the cashing of checks above 50,000 Naria, 112 US dollars, over the counter, and 10 million Naria, $22,480 through the banking system. So they're not even going to cash your check. They're not going to let you get that cash. Resist, people. Okay, this is I keep saying CBDC is bad news. Meanwhile, banks are only allowed to load their ATMs with 200 Naria denominations and under, while individuals and corporations will be allowed to cash a maximum of 5 million to 10 million Naria respectively if there are compelling circumstances not exceeding once a month. So these compelling circumstances, the government is going to decide what you can get, and you can only pull that card once a month, is what they're saying. Customers should be encouraged to use alternate channels, internet banking, mobile banking apps, USSD cards, POS, eNaria to conduct their banking transactions. That's according to the central bank. Guys, look, resist this, okay? And the way you do that is by looking for opportunities to trade directly. You're not going to be able to do that in 100% of the cases. But there are some opportunities for you to trade directly for certain things that you need in your life. You're going to have to take a look at your situation and figure out where, if at all, that's possible. I'm sure you can find some ways. Now, you're also going to have to strongly consider converting assets into, physical assets and coming up with an idea in your mind that is moving away from the traditional definition of wealth, okay? A lot of Americans believe that having the accoutrements of wealth is equivalent to being wealthy. That is not true. Land, precious metals, other commodities, like maybe you grow on the land. These are things that you're going to have to seriously consider denominating your wealth in as we move into this environment. We're going to have more on this, but I want you to stay tuned, because the next video on the channel is going to take a look at whether or not the whole FTX scandal was orchestrated in part to decrease faith in the crypto market, the private crypto market, in order to help facilitate a move toward this CBDC environment. All right, guys, check this video out where we're talking about the whole FTX scandal and whether or not the young lady involved, Caroline Ellison, the CEO of the hedge fund, whether or not she is snitching right about now, saying, I ain't going down for this, buddy, and it's turning state's evidence. Watch that. We've got other videos on that scandal. We're going to get into more of this, guys. I'll talk to you soon.